who have lost their jobs of late in the last 3 to 4 months. There are so many businesses which are shut down. Markets has been the only business which has not been affected in terms of operations, and it has been on ever since. So even if you have traded and invested intelligently, last 3 months you would have actually made a lot of money in stock markets. In fact, the lockdown period has been extremely good for most of the people who are actively into markets. So if you are into stock markets, you can actually trade from anywhere, and the lockdown doesn't really affect your business anyway. You have a specific market timings from 9:15 to 3:30 p.m. only. That is the timing that the market is on. So with women, yes, you don't really need to have a 10-hour or a 12-hour job, and you don't have time to give to your family. Nothing like this. We have small, like, markets have got a shorter work timings. So yes, it's only 9:50 to 3:30. Post that, you can be with your family. The next thing is you are your own boss, and you don't have anybody to answer to if you are yourself an entrepreneur and trading in the stock market. Suppose someday you have some obligation wherein you can't skip, where you can't really work, or another 10-15 days you will be occupied. You can actually stop working and go off on a holiday without any pay loss or anything. So the days you work, you earn. The days you don't work, you're not even answerable to anybody. So you are your own boss. And most importantly is that if you're in stock markets, you can earn money both ways. What do I mean by earning money both ways? So even if the market is going up, you buy at a particular price the asset, and then you sell it later at a higher price, you earn money. That is the common perception. But stock markets give you a way where if you think that the markets are going to go down, you can actually sell first and then buy it at a later price at a cheaper price. So you can actually earn money that way also. So if the prices are going up, you can still make money. If the prices are going down, there are ways you can make money that side also. So actually, business cycle, you just need to evaluate and understand the scientific way that which side the market is going to go. Once you understand that, you can earn money both ways. Unlike many businesses, for example, if you talk about any luxury item or a brand, during this COVID times and lockdown, they are one of the worst hit sectors, which is just not working. So they don't really have a way out of it till the time the economy actually survives. But with markets, there's nothing like that. Okay. So moving on. So as I said, that to make money in the stock markets, what is one of the things which is extremely important is a informed trading decision or an investment decision. So it is a proper science, it is a proper study which needs to be adapted to. And one more thing which I would like to say is that there is nothing called sure shot in any business or even in stock markets. So basically, what we try to do here is that through our educated and a scientific system, through education, what we do is we try and take out the highest probability correct actions or correct trades or investment decisions in the market. So the probability of you being correct is much higher, to 80 to 90% compared to blind action which you have taken by just listening to somebody that buy this share or sell this share, something like that. So that is like a gambling. When you do not know about the outcome, you do not know about anything, and you just blindly put in money, so that is gambling. But when the moment your decisions are informed, your decision is backed by some research, by some analytics, yes, your chances of being correct in the market, the probability of you being correct in the market actually increases multifold. So there are three basic actually tools which is used in stock market. They are the fundamental analysis, technical analysis, and sentiment analysis. Now, to talk about fundamental analysis, what is it? It is basically to understand and identify the fair value of any asset. So what do I mean by fair value? Fair value is basically the intrinsic value of any asset. Now, to give you an example, say if we talk about a stock called Reliance, and a fundamental analyst will always talk that what is the fair value of an asset? What is the fair value of Reliance? Reliance is trading at 2,000 rupees today, but the fair value, that means according to the books, according to the cost, it should actually be worth, according to the assets it is owning, asset minus liability, probably the fair value of Reliance is, say, 800 rupees. Okay. And then what do people think about the stock? What is the perception about the stock earnings, considering the present scenario, that how much the business is going to grow in the next 1 year or 2 years? The 10% compounded annually or 15% compounded annually. Accordingly, they actually get derived at a valuation, and then they compare it with the current market price. So suppose they derived at a value of 2,500 rupees of Reliance, considering their present business structure and everything, and the valuation model. And currently the stock price is at 2,000 rupees. So we can make a statement that yes, the stock is undervalued, and they can actually, the stock is undervalued because it should actually value at 2,500. Currently the price is 2,000. So yes, there is a 500 rupees gain, further room to go up. So we can eventually buy the stock today in an expectation that the prices will go on further based on XYZ reasons. So this is what is fundamental analysis, where you actually find out the fair value or the intrinsic value of any asset. So what is technical analysis? Technical analysis is basically where a technical analysis is actually a different streamline and a thesis altogether, where an analyst, a technical analyst, believes that whatever the price is in the market is the supreme price. It is and price actually discounts everything, whatever factors which may affect the price, so on. So there is nothing called overvalued and undervalued according to the theory of technical analysis. So price is supreme, prices discount everything except the act of God. Yes. So whatever price is, so looking at the past prices, we actually try and predict the possible next move in the market. So that is what is technical analysis is all about, where analyst actually focuses on analyzing the trend in the market. Now, if I have to talk about sentiment analysis, this is again a very, very important thing. It is basically, we need to understand that we all are human beings who are trading in the market, and we all have worked with some similar psychology in the market, right? So once we understand the psychology of the traders in the market, and and once that starts becoming viral, so we place our trading or investment decisions accordingly. So say, for example, there is a particular news in the Reliance stock, and everybody feels that Reliance is a very, very good company and it should go on further. So probably I put it up on my social media, and likewise few of my friends and you all also start putting it up on the social media. So there are people who might not have even known about stock Reliance or anything. When they see different social media posts or anything, so they also have some positive mindset towards Reliance. So this is actually sentiment analysis, where you take up a trade or investment decision based on the sentiments of the people who are existing in the market. Okay, so what are the factors which we actually look for fundamental analysis? So, we go through the financial statements of the company, the profit and loss balance sheet, and whether the company is going to give dividends or not. Who is managing the company? What is the track record of the management? Whether they have adequate experience in this line or not? Is there any criminal records against the management or not? How genuine is the management? How is the dividend been? What is the sales growth? what is the industry analysis. So all of these factors, when you study, you are actually doing a fundamental analysis of the company, right? And then eventually you come to identify the intrinsic value of the stock. So when you do a fundamental analysis, we actually focus more on a slightly longer term trading opportunities or investment, I would say, because the quarterly results of the company which comes and balance sheet and everything, so they all are they all come at a period of 3 months. So minimum holding period, if you are making your decisions, investment decisions based on fundamental analysis, is at least 3 months, and that is actually the holding period which you should see, and it is slightly oriented towards the long term. Coming to technical analysis, as I said, it is basically the study of price, study of past prices to predict what is going to happen in the future. So it is a graphical representation of the price and volume. Why volume? What is volume? Volume is basically the number of shares which has been traded in the market, which has been traded. So it actually tells you the sentiment, how much people are actually involved in the price fluctuation. So it is actually a science of recording prices and then looking at the past trends, because it is being believed by technical analysts that prices always move with trend. And by studying the price, you are actually automatically studying the demand and supply. So there is many a times when I come across this question that whether I should be actually doing only technical analysis and not fundamental, or I should be only focusing on fundamental analysis and not technical analysis. So I would say that both these studies, they complement each other. It is not that you cannot trade based on only one, but yes, if you use all of them, both of them with tandem to each other, the chances of probability and the probability of your success goes higher. It is always advisable to use technical analysis and fundamental analysis complementary to each other and not as a substitute. Technical analysis is the study of prices. We can actually apply this in a shorter time frame also. So intraday traders or short-term traders, they have to have a good knowledge about technical analysis to make money in the stock market. Only through fundamental analysis, it would be difficult. Now, the third is sentiment analysis. Now, as I said, sentiment analysis is basically understanding the common perception of the people who is trading. So there are scientific tools again available wherein we study those and we understand the sentiment, which includes the open interest and news flow, and some breadth indicators like advanced decline ratios, FI, data, deliveries, and volume. So all of these help you, and what's called ratio, yes. And so all of this helps in sentiment analysis. Again, if we use all three of them together, the result is much more better and desirable. Okay. Am I audible to everybody? I just...
Yes, Suchi, you're audible to us. I think Rashmi is facing some issue. We are trying to help her. Yeah.
Okay, fair. Now the next question is, how do we begin the journey in stock market? Once we've discussed that, stock market is fine, every woman should actually consider stock market as an option, considering its flexible timings and all of those. Now the question is, how do I start? So, yes. So I have actually jotted down few steps, which is absolute essential to begin your journey in stock market. So the first step is getting educated. You need to have a proper knowledge and a proper, background, academic background to start your career in stock market. Now, by academic background, I don't mean that a professional degree is required. No. can I please request everybody to put yourself on mute? Okay. So, the first step is that you need to have the adequate knowledge. You need to know the science behind how stock markets work. What is fundamental analysis? What is the steps in calculating the intrinsic value? How do I identify a trend? You need to know the theory. You need to know the science behind the working of stock markets. And for that, you need to have specified, training, academic training for that. And we here as Elon Markets and Credit Academy, we actually specialize in giving financial market training in association with the National Stock Exchange. So the first step for you to begin your career in stock market is to get the right education. And the education should not be only theoretical, it should be very, very practical oriented. Hands-on practical orientation should be there, because stock market itself is a very, very practical subject. It is a surprise to everybody. So you need to have a practical approach to the concepts of the stock market concept. Sorry, so you need to have a practical approach to all the stock market concepts. So you need to have a proper education to define that. The second step is to define your objective. Now, before you take your money and you decide that, okay, I want to actually start earning from stock markets, I'm lucrative enough, market is going up. First, you need to know is what is your objective. Whether you are a full-time trader, can you be full-time to markets? Whether you are a part-time investor, are you looking for long-term investment? Do you want to trade just in mutual funds? You want to focus in swing trading? All of this, you need to define your objectives before you actually step into the market. Because just by looking at others, listening to others, you and taking a step randomly, you may actually end up burning your hands. So you need to know the kind of time commitment, the kind of monetary commitment which you can give. You define your objective and then you take steps accordingly. The third step is that you need to get the correct tools. Now, suppose when you say correct tools, I mean the correct infrastructure. Now, suppose you decided that you need to go from Delhi to Bombay, you can't just simply step out of the house and start walking. No, you have to get to the correct transport. You need to either book a flight or book a train. You need to have a PP suit and all the proper protective measures to protect yourself from any kind of contamination, and then accordingly you will probably reach your destination. So even in stock markets, especially when it is such a data-driven work, data-driven business, you need to have the proper infrastructure, proper tools where you get the access of the correct data. And with the help of that data, with the help of those tools, you can take your decisions wisely and efficiently. Because that getting to the correct tool and getting access to the right data will also help you actually save time and work efficiently in the markets, which is again very important. Now, the fourth point which I would like to say over here is getting the access to the right broker. You need to open up a broking account with if you want to trade in the markets, and you need to get to the right broker. By right broker, what I mean that if you are a full-time trader, you can probably, so there are many types of brokers which is available in the market. So, you need to choose. If you are a full-time broker, a full-time trader, you can actually go to a full-service broker. And if you are a part-time, if you are a full-time trader, you can actually opt for a discount broker where the broking fees is extremely low. And if you are not trading very actively, then you can go for a full-service broker. By the way, just an announcement that we have actually tied up with Upstock Broker recently, wherein if you open up an account with the Upstocks, you get access to our stockage membership, absolutely complimentary for 3 months. At the same time, you also get one of our financial market courses of learning the stock market basics worth rupees 999, absolutely complimentary once you open up an account with Upstock. So this was just an announcement. Now, suppose the fifth step, which is towards the making money, your career in the stock market, is continuous learning. Now, in markets, everybody is a continuous learner. I myself have been in the market since last 15 years, and we all are still in the learning curve. You have to be in the learning curve because markets surprise you every day. It has every new things every day for you. So you need to be constantly learning from people who have more experience, experts, so that your knowledge is always upgraded. And to do that, the most important thing is to become a part of the community. The sixth step. Now, what do I mean by becoming a part of community? Basically, you need to interact with like-minded people who are into the same business, who are thinking. You need a very simple logic. There are 5,500 stocks which is listed on the exchange, and there are more than 200 sectors. You can't master everything. But when you interact with similar kind of people, like-minded people, you learn from other people, you share your experience, people learn from you, and yes, a healthy conversation will always benefit you as an individual. So you need to become a part of a community where you can actually interact with people to know more about markets. So first is to start with learn the basics. When I said that you need to get a proper academic or a proper knowledge about stock market. So there are a lot of free video courses on our website, eLearn Markets, where multiple modules are available for free. So you can actually go through them, and 2 hours a day for minimum 6 months. If you focus on them, yes, you will start getting a hang of the market. And yes, obviously, if you want to take your learning to a next level, obviously, so you need to pay a small amount for that. So yes, we have some specialized courses which is certified by NSE, EMCC, MP, and CRT. All of this where it is an exhaustive, detailed, next level learning from all the subject topics which is available. So according to your comfort level and whichever field you want to master in, you can take up the course. And all these courses are, they have been taken up by extremely experienced faculty which are into market full time, and you can actually interact with the faculty real time. So there are live sessions, and plus there are recorded videos also. So you can take them up according to your convenience. Okay, so this is one thing, and the next thing is once you have learned the basics and you have a niche idea about how the markets work. The second thing which I said is to define your objective. Now, how do I define my objective? So suppose if you want to take up markets as a full-time business or a job, and you have done or you are planning to have these specialized certification programs like a CA, CFA, and an MBA Finance. So they all have a proper knowledge, but in a theoretical way. So I would suggest you then again our CRTA program, which is certified in research, trading, and advisory. This is again, if you take this up in line with your CA or CFA, it will give you a practical and a holistic 360-degree approach to the concepts which you are learning in your CA and MBA. In fact, I have completed my CFA, and at the same time, I was in markets myself. trust me, the ease at which I cleared my exams compared to my friends was much, much easier. Why? Because, I was actually having a practical hands-on experience. So I understood the concepts much better. Right? So a practical approach is extremely, extremely important. So if you want to get into trading, which is actually full-time involvement in the stock market, so you actually again decide whether you want to do an intraday trading wherein whatever buying and selling happens, whatever trade you pick up, you square up within that trading itself. And with respect to swing trading, basically you take positions in the market for short period of time for a range of say 1 week to 1 month. And to do trading, whether it's a swing or intraday, you have to have a very, very solid knowledge about technical analysis. So you need to take up courses on technical analysis, which again gives you very, very practical oriented knowledge. The books, only reading the books will never help you. And suppose if you want to go into investing, suppose you want to take up stock markets for investing purpose, wealth creation purpose, where you are not actively involved in the markets, but yes, you are investing from time to time. So you again can define whether you are a value investor, growth investor, or a cyclical investor. By value investor, I mean that you actually identify stocks which are beaten down in value, and you feel that the fair value is much, much higher, but the current market price is lower. So you identify such stocks and invest in that. Growth stocks, by growth stocks, I mean that you identify companies which is growing multi-fold, 15%, 20% year-on-year basis. And so you identify those stocks and invest in those companies which are going to grow at a higher speed every year. And with cyclical companies, I mean cyclical investor, I mean actually that when you identify companies which work according to the business cycle. So they are cyclical. They work the cycle of business like the steel industry or the auto industry or for that matter, commodity like sugar. They're all cyclical industries. So any which ways, if you identify any of these investing styles, you need to have a very, very solid foundation about the fundamental analysis. So you need to take up fundamental analysis properly to the core. You need to understand the concepts very, very well before you actually end up entering into investments. The third step, which I said, to get the correct tool, again, get the correct infrastructure. So, stockage are, hello? Yes. So, stockage is a very, very important tool which is extremely, extremely helpful and gives you a very, very good knowledge about, all the company and all the details and for a part-time investor and for a full-time trading professional, I would strongly recommend investing.com and TradingView. These are the two softwares or websites which you should go to if you are planning to pick up for a full-time professional. Okay, so I will just show you something. This is taking a while loading. I'll show you later. Okay, anyway. So I would have shown you stockage any which ways. So these are the tools which is extremely important. Now, next is to get the right broker. As I said, that if you trade every day and your transactions, the number of transactions which you take up is very, very high. So you should go in for discount brokers where the number of the brokerage on each transaction is very, very low. And if you do not trade every day, you should always go for a full-time broker, serviced broker, where you get access to different research reports also, and they assist you better with your trading and with their research, which will brokers is what you can see here. Now, continuous learning, how do you do that? So we have a very, very amazing section of blogs at eLearn Markets. This is the link, elearnmarkets.com/blogs. So there are various blogs in different languages, both in English and Hindi, and different stock market topics related to fundamental analysis, sentiment analysis, derivatives, technical analysis, all of them in a very, very practical approach has been written. They are extremely, extremely good and absolutely free. So you must go through the blogs, which will help you in continuous learning. At the same time, we have blogs, which is our video learning on our YouTube channel. So if you go to YouTube and eLearn Markets channel, and if you go, we have various series like face-to-face series and Market Shala series and small investment series. So they are again tutorials, and they are again live market experiences shared by different experts, where if you go through them, you have a very, very good learning. So blogs and vlogs, and again we have webinars. So we are again one of the highest repository of financial market webinars by different experts. So if you go through elearnmarkets.com/webinars, and you see there are a lot of free webinars also which is there, and the other webinars are very, very decently priced, as less as 500 rupees or 600 rupees, where you get a very, very nice insight about these market experts, and you can actually have a look at them to learn further from the market experts. So the next thing is that you have to become a part of the community. So as I said, that you should be a part of any WhatsApp group or Telegram group, LinkedIn, and Twitter. All of these have different stock market groups. You should be a part of any of these dedicated groups, and treat it like a joint family actually. And you can communicate and interact with people of the similar thought process, and actually which will help you trade better and invest better. So we have a dedicated stockage club also with more than around 900 members, where again they can interact with the research team on a live basis, questions and queries, and they get answers. So you can actually check out our stockage club also for your interaction purpose. So if you become a member of the stockage club, you also get access to our webinar section also. So check out our stockage club or stockage website to know all the details. Now, one thing very strongly which I would like to refer you all in terms of learning is our flagship course, which is Certification in Research, Trading and Advisory, which is known as CRT. And this is a course which is being certified by National Stock Exchange, and you get a certificate of completion by the NSE in affiliation of eLearn Markets. And this is a holistic program which gives you a very, very practical approach, full-time knowledge about all the aspects of the financial market which is required. So you can actually take up a career as an investor, as a trader, as a research analyst, as an investment advisor, whichever field you choose in. CRT is the program which will give you the knowledge about the entire all the concept. So if I have to sum it up, we have different modules attached to this course, which is we are you will be studying about foundation of capital markets. So assuming that you know nothing about stock markets, your course will actually start with the very, very basic, and then you move on to equity research, which again focuses on fundamental analysis and equity valuation and financial modeling, where you actually find out the intrinsic value of the stock. You learn about different asset classes like fixed income and interest rate futures and currencies and commodities. You learn about technical analysis and option strategies if you want to become a trader, full-time trader, and derivative analytics, and to know about mutual funds and advisories and insurance you feel, there is a dedicated module of wealth management also attached to this course. So it is a holistic 360 degree, I could say every aspect of the stock market is covered in this course.